So today we had a big green day for Tesla stock as Tesla closed up much more higher. And although I did do a video earlier today talking about the overall markets in Tesla, I want to provide an update on what I currently see is going on with the overall markets in Tesla and just other things I think we should be mindful of. Now, when I made that video earlier today, it was around 12 p.m. to 1 o'clock. And one of the things I said was, and this was when Tesla was right around this area over here, and I pointed out to this red rectangle over here, and I identified or labeled this red rectangle as an intraday supply zone, meaning that for today only, meaning that tomorrow it could break above it, and I wouldn't be surprised if it didn't. But for today only, I expected that Tesla was going to hit this area over here and get rejected, and that's precisely what we ended up seeing. I remember saying in the video, let me know in the comment section below what ended up happening for Tesla, and some of you guys did point out that, yeah, Tesla did run up, and it did get rejected right over here. Now, real quickly, let's go ahead and just zoom out and kind of show you guys why I pretty much saw this as an area of a supply zone and why I expected Tesla to kind of get rejected, and then talk about why we could possibly actually see Tesla continue going upwards. So a lot to talk about in today's video, so make sure to watch it in its entirety. So let's go ahead and really quickly just look into a 4-hour time frame on Tesla. And one of the things I want to highlight is that when we look at Tesla on a 4-hour time frame, we see that in the past, right around over here, it's been somewhat of a resistance, but also this over here has been somewhat of a support, and old support becomes a resistance, which is why I labeled this as a supply zone for Tesla to most likely reach it and then get rejected, and that's exactly what happened. But it doesn't mean that Tesla can't break out of this supply zone tomorrow, especially with some of the data that I want us to pay attention to. Now, if we actually look over to the right, let me actually delete this. I don't like my charts to be too cluttered. And we actually pay attention over here to the right. We see that there's this pocket of volume, and when there's a low amount of volume relative to price, well, if there's buying pressure, well, that could push up the order books and Tesla could go much higher. And then, of course, the next thing we'd want to watch out for is this descending trend line, which has been pretty strong for Tesla. If we kind of just go back and see how many times, let's go on a daily time frame, and it's probably much better. We've seen that Tesla has gotten rejected off of this descending trend line for quite some time. But why did we see Tesla stock rally up today? Now, in the Push and Profit private group, which is a group where I hold my daily briefings, where I talk about what's going on in the overall markets, as well as share some trade ideas every single day the market's open, a couple of things I mentioned was some of the data points that we've been looking at for quite some time. For example, if we actually take a look over here, we see that crude oil actually took a dive today, and this actually relieved some pressure for the overall markets, and we're going to go ahead and talk about that. But let's go ahead and actually look at it from a 5-year time frame to get a better picture of it. Now, we saw that crude oil was trickling upwards for quite some time, and I said that this was a concern as it's an inflationary pressure to the headline CPI report, because of course this means that energy is going up. Now, it didn't go up to the levels that we were back in January of 2022, June of 2022, or actually when it first peaked in February of 2022, where it was pretty much high the whole entire time. So we definitely didn't reach those levels, but it was still concerning, right? And of course it was pretty much pushing up because of what was going on with Saudi Arabia and Russia and them stifling oil production. However, today we did have some news, and it was some news that contributed to the crude oil actually falling downwards. And so, to really sum it up and put it in a simple term, crude oil going down equals inflationary pressures going down, which equals market very happy. In fact, if we take a look, it wasn't just Tesla and Silo that went up. It was actually, if we look, the S&P 500 actually pushed up. Now, it wasn't as strong as Tesla, but it definitely had finally a green day. And if you look on a 4-hour chart, we've had a lot of red days for the S&P 500. And so this was actually one of the first solid green days going upwards. Yeah, we had a couple of green days in the past, but it's been a lot of selling pressure. And I actually just recently looked into my trading journal, right? Because I do invest in Tesla and the S&P 500 in the long term, but I also have a separate trading account where I trade in the short term. And today I was actually reviewing my trading journal where I write down all my trades that I do, and I noticed that almost all my trades that have been very profitable have been shorting the market recently. Now, it makes sense because the landscape has been pretty much going downwards for the overall markets. But let's go ahead and stay on topic. Let's go back to Tesla and let's actually highlight something else. So again, it was crude oil coming down, which was good. but also the 10-year treasury started to trickle downwards as well. Now, this is something we talked about so many times within the Push for Profit private group, and also I've said publicly a few times on this channel that when the 10-year treasury is high, that puts some pressure on the markets, because why would a market participant, especially when we have to think of institutional investors, we can't just think of retail traders or investors like ourselves. We have to think of people who are moving billions of dollars of capital, who actually have an influence on the markets, right? When you see the market rallying up for the first half of 2023, but then going into the second half, things get shaky and the 10-year treasury go up, well, that puts pressure on the markets, because as it was going up, it means that, hey, we could go ahead and park capital in the 10-year treasury and get this guaranteed return of these high yields that we haven't seen since like the last 16 years. So that was one of the reasons we were seeing a lot of pressure for the markets. And so seeing that this came down as well as crude oil, well, that was just overall a green signal for the markets. But it wasn't just those two simple data points, as well as when we look at some of the economic data that we got today, we saw that at 8:15 we had the ADP employment numbers, which are the private sector job numbers that are usually coming, or they're like a precursor to the government job data that we actually get on Friday. So on Friday, we're going to get an update on the unemployment report as well as the U.S. hourly wages. And so all this data information or job data is something that we want to pay attention to, because we've heard multiple members of the FOMC say that they want to see a cooling off of the labor market, because this is something they want to see, as it's going to help on their battle with inflation. Because of course they don't want to have multiple or millions and millions of Americans unemployed, because they have two mandates, right? They have a dual mandate of price stability and then also maximum employment. But what the Fed has really spoken it out word and said a multitude of different times is that they want to see just the labor market cool off a bit more, and then that's going to help with inflation. And this is why in a previous video I talked about the economic model of looking into the Phillips curve, and I'm not going to go ahead and break that down in this video, as sometimes going too deep into things like that may seem a bit boring. But naturally, when you see unemployment pretty much tick upwards, well, that means that inflation starts to come downwards. And so that's exactly what the Fed is kind of looking for, that equilibrium of just a little bit more cooling in the job sector. This way they could fight inflation, which is something they have been battling on. Now, the ADP report actually came out softer than what was expected, and that was good. That was definitely good, especially after the job data we had yesterday, which I'll talk about later on in this video. But I wanted to actually highlight this tweet I shared today on Twitter, where I said, is your local gas station okay? Because if we look at this heat map for the overall market, almost everything was green except for Exxon, Mobil, Chevron. I mean, a lot of these you got to ask your local gas station if they're okay, because everyone else did very well except for them. But, in all seriousness, I want to point out to this tweet that Gary Black made, right? And this was a tweet he made earlier, and if you guys don't know, he's a fund manager, very bullish on Tesla, says some good things. Of course, you got to, take everything what everyone says with a grain of salt, and you can't blindly follow any fund manager. Not Gary Black, not Kathy Wood, not someone you see on YouTube like myself, or maybe someone else on YouTube, or anyone on Twitter, right? You have to always do whatever you see value in, right? And so we saw today, he said, today's weak ADP payroll, 89,000 versus 150 expected, is far more important than yesterday's JOLTS data, the job openings. Now, this is something I want us to pay attention to, because as I previously just stated, the labor market job data has been having a huge influence on the markets. In fact, let's go ahead and let's look at Tesla. Let's look at Tesla on a 5-minute time frame. Or actually, let's actually zoom back. And one of the things we saw yesterday was exactly at 10 a.m. when the JOLTS report came out, we saw Tesla stock sell off. In fact, if we take a look at the S&P 500 as well, exactly at 10 a.m. when that report came out, it sold off as well. Now, why did it sell off? Well, we saw that the job openings actually came out hotter than expected. Now, this was kind of some data showing that, hey, the labor market is still pretty robust, and that's pretty much a bummer for the Federal Reserve. And we know that the market wants the Federal Reserve to kind of see themselves being able to start cutting. And so we want to see the labor market, not that we want Americans out of jobs, of course, but the market wants to see it cool off. This way, the Federal Reserve can be happy and satisfied and no longer keep rates at these high levels, although they have been stating for quite some time that it's going to be not about the question of hiking or cutting, but more about when are they going to, or how long they're going to keep rates elevated, right? And so this is why you want to pay attention to economic data. I know so many individuals, they only focus on the squiggly lines on the chart, right? And I'm not saying I don't use technical analysis. You guys saw earlier in the beginning of this video, I had a supply zone drawn over here, but you can't just use one data point. I say you want to pay attention to the fundamentals, the technicals, economic data, as it has a huge role in what takes place in the overall markets. And so that job data today with the ADP employment numbers from the private sector coming off cooler was good news for the markets. Now let's actually go back to this tweet from Gary Black. Now he said, the reason it's more important is because the ADP job data is from September, right? The job openings data that we got from the government is from August. And so that's something that we definitely want to be mindful of. It's more recent data, and so that's why it's more important. Now, if we go back to the economic calendar, one of the most important things we're going to want to pay attention for this week, of course, is going to be the initial jobless claims, which is a weekly report, comes out every single week. And of course, this is just not people, in or unemployment rate, but it's people filing for unemployment. So that's something we want to keep an eye out, because if it does coincide with it coming in softer, just like the labor market, or actually going upwards, right? If it actually goes up higher, well, that would seem as like really positive news for the markets. And then of course we want to look at the unemployment rate. And it's, again, I want to emphasize, it's not that we want to see Americans out of jobs. It's just that we want to restore this equilibrium where we kind of have this balance that could satisfy the Feds. This way we get sooner to the time when they start cutting, which, by the way, if we actually take a look over here for November 1st, the next FOMC meeting, there's actually only a 23% chance, the futures market, because this is based off the futures market, is pricing in a 23% chance that the Feds are going to hike and a 76.9% chance that they are going to pause. Now, I expect as we get closer, and if we continue to get good job data, this is most likely going to come down. And I actually very strongly believe that the Fed isn't going to hike, that they're just going to pause. And just like they said in their summary of economic projections, that they're just going to keep rates elevated for a lot longer. So, we're most likely going to see this cool off, and hopefully, fingers crossed, we get some good job data that could satisfy the Federal Reserve. Now, going back into Tesla stock, I want us to look at things from a daily time frame. Now, yeah, we had Tesla stock pop up, and the real question is it going to continue to pop up? Well, one of the things we have to understand is that fundamentally we do get an update on their earnings, which is going to be the Q3 earnings, and it's expected to come out on the 18th. So not too far from now, just a couple of weeks from now. And of course, we know that Q3 is not going to be that great. But one of the also, another thing that we have to understand is that we do have the catalyst of the Cybertruck deliveries, and I do believe that that's right around the corner. In fact, some individuals I saw on X.com, formerly known as Twitter, have been speculating that the reason, an additional reason that Tesla rolls up today was because insiders know that the Cybertruck is right around the corner. Now, I personally just don't go off of speculation like that. I mostly just like to look at data that I could actually understand and see. Of course, there's always going to be people that are on the inside that have more data than you, and that's fine. I'll just follow the price action as well as economic data as well as what's going on, right? And so I really can't just go off rumors, but it's pretty interesting because if we do have the Cybertruck deliveries start to roll out, well, I definitely believe that could be something that could push us finally close to this area right over here, and we'll see if Tesla breaks above this descending trend line, which has been a big problem for Tesla for quite some time. And of course, if Tesla breaks above this descending trend line in my long-term portfolio, I'll go ahead and add more shares of Tesla. Now, I want to go ahead and explain the reason why, because I know oftentimes I talk about buying more Tesla when it sells off drastically, and then once we see that confirmation of the uptrend, then I add in, just like what I did last time. But I also want to say that if Tesla breaks this trend and enters into a new trend, an upwards trend, then yeah, I'll go ahead and add into my Tesla long-term portfolio as well. I'll be glad to. So, I buy when things are starting to, break into pivotal moments, identifying new trends upwards, or when we're bouncing up from, a trend that's downward. So those are two pivotal moments, and I actually learned that from one of the greatest traders to ever live, which is Jesse Livermore. There's two great books. I definitely recommend you guys reading Reminiscence of a Stock Operator. It's definitely a classic. You often hear many fund managers like Paul Tudor Jones, etc., talk about how that's a classic, as well as How to Trade Stocks by Jesse Livermore. And the reason I mention that is because buying at new trends upwards or a confirmation off, a bottom, those are just literally things I've taken from that book. And if you guys don't know who he is, basically he was someone who shorted the market during the Great Depression. At one point, he was one of the richest men in America. And although he did have an unfortunate ending, he was definitely a great market participant, and this is why there are some rules that he mentions that I implement, just like journaling my trades. Just like I mentioned earlier, I noticed in my journal today I've been shorting the markets quite some time, but those trades have been profitable considering the landscape that we're in. But we're definitely at an interesting time right now with Tesla, where if we do get some, catalyst news such as the Cybertrucks rolling out, it puts us close at a pivotal level. So again, it's something that we're going to want to watch out. But me personally, I do believe that it's possible for Tesla to kind of continue upwards, but I don't think it's likely that we're going to break above this trend just yet, unless we see something come out of like the blue. But I do think that when the earnings come out, it's possibly going to be just like what we saw last time, where Tesla was running up tremendously. And then the minute we got close to the earnings, or once the earnings released, we saw Tesla stock fall off. And so we may have somewhat of a similar story. But I want you guys to let me know in the comment section below, what are your thoughts on Tesla, both in the long term if you're a long-term investor, or also if you're trading Tesla in the short term. I know some individuals just like myself like to short Tesla or buy puts or sell calls just to hedge our long-term position. But let me know in the comment section below. And with that said, make sure to watch this next video right over here, where I break down the importance of why you should journal your trades, or make sure to check out this video right over here if you've already seen this one. With that said, I'll see you guys on those next videos. Take care.